Let's be honest, annual reports, they can look like this huge wall of text and numbers, right? A little intimidating. But what if I told you that inside this document, there's actually a detective story? A story about money, markets, and huge economic forces. Well, today, we're going to crack one open, the 2025 annual report for the ABF Singapore Bond Index Fund, to find that hidden story. So let's grab our magnifying glass and start digging in.
You know, every good story has a surprising ending, so why don't we just start right there? 105,209,737 Singapore dollars. This is the total profit, or what they call total return, that this fund made in just 1 year. It's a massive, massive number. But a number this big, I mean, it's pretty much meaningless without some context.
And here it is. This is our first major clue. So in 2024, the fund did pretty well, made a respectable $15.4 million. But in 2025, whoa, it skyrockets to $105.2 million. That isn't just a good year. That is an absolute blockbuster. The performance didn't just get a little better, it completely exploded.
And that right there brings us to the central mystery of our entire story, a nearly seven-fold increase in performance just from 1 year to the next. So how on earth did this happen? Was it some kind of stroke of genius, a market miracle, or is there a totally logical explanation buried somewhere in these numbers? This is the question that's going to guide our whole investigation today.
Okay, so to understand how this all went down, we first need to know who it happened to. What exactly is the main character in our story, this ABF Singapore Bond Index Fund?
So, in simple terms, it's an exchange-traded fund. You've probably heard it called an ETF. Just think of it like a basket that holds a whole bunch of different investments, so instead of you buying just one thing, you buy a tiny share of the entire basket. And in this case, that basket is packed with high-quality bonds issued by the Singapore government and other closely related groups. It's a super easy way for anyone to invest in the stability of Singapore's debt.
And this tells us the fund's whole game plan. First off, it's a pioneer, the very first of its kind in Singapore. Its job isn't to try and outsmart the market or pick winners. Nope, it's just supposed to track a preset list of bonds, which is a really passive and cost-effective way to invest. But that last point, that one is absolutely crucial. Even though it's stuffed with government bonds, the fund itself is not guaranteed. There's still risk involved here.
All right, we know our main character. Now it's time for the real detective work. We're going to follow the money. We're going to dissect the fund's core financial statement to find the real source of that incredible $105 million profit.
You know, a fund's profit really only comes from two places. First, you've got income. For a bond fund, that's just the steady interest payments it gets. And second, you've got capital gains. That's when the actual market value of the bonds it holds goes up. So which one was the hero of this story? Was it the slow and steady income, or something way more dramatic?
And boom, the statement of total return gives us a crystal clear answer. Okay, so the fund had about $2.5 million in expenses, you know, the basic cost to keep the lights on. But look at that top line, net gains on investments, a staggering $107.7 million. You take away the expenses, and there it is, our blockbuster number.
So there you have it. The mystery wasn't solved by income. The interest it collected was actually pretty small in comparison. This entire blockbuster performance, it came from just one place. The value of the bonds themselves just shot up. This is a capital appreciation story, plain and simple.
And just look at the scale of that change. In 2024, investment gains were a solid $17.8 million. Fine. But in 2025, that number jumped to $107.7 million. That is a massive, massive shift. So we figured out what happened. Next up, we need to find out why.
Okay, so knowing that these huge investment gains are what powered this whole thing leads us to the next logical question. What does this fund actually own that became so incredibly valuable all of a sudden?
I mean, a fund is really just the sum of its parts, right? So let's take a look inside the portfolio.
And this portfolio breakdown is, well, it's incredibly revealing. You see a few small slices for things like real estate and engineering, but the fund is just completely dominated by one single category: sovereign bonds. They make up over 82% of everything it owns.
And when a fund report says sovereign, it basically means one thing: government debt.
This fund's fate is completely tied to bonds issued directly by the Singapore government. So when the value of those bonds goes up, this fund does very, very well.
And here they are. These are the actual assets that were driving the performance, the top 3 holdings in the entire fund. You can see that almost 7% of the entire fund is in just one single Singapore government bond. See, these aren't just abstract ideas, they're specific investments whose prices are moving every single day. The fund's billion-dollar fate rests on bonds just like these.
So we've followed the money, we've found the source of the profits, and we've seen the exact assets that were responsible for it. We've pretty much cracked the case. So now, what's the takeaway? How can we use what we just learned to read between the lines of any financial report?
This whole process gives you a really simple framework you can use for any report. Always start at the end with the big bottom line number, the total return. Then work your way backward to find the main driver. Was it income or was it gains? And from there, you dive into the portfolio. The answer to why that big headline number is what it is always, always hidden in the details of what the fund actually holds.
But, the report itself gives us the most important warning of all, and it's one that's really easy to just dismiss as boring legal stuff. Right there it says, past performance is not indicative of future performance. This fund's blockbuster year gives you zero guarantee that the next one is going to be the same. The exact market conditions that made these bonds soar in value could easily go the other way. The story of 2025 is just that. It's a story. It's not a prediction.
So I'll leave you with this thought. We used this report to understand the fund, but it's also like a little window into the wider economy. We know that Singapore government bonds soared in value, but the real question is, why? What does that signal about things like interest rates or inflation, or how confident investors are feeling? The report tells you exactly what happened inside the fund, but its real value is in the clues it gives you about the entire world outside of it.